Welcome to our channel. In today's video, we're going to delve into the world of futures trading and explore the significant benefits it offers to traders and investors. If you're new here, don't forget to subscribe for more informative content on trading and investing. Let's kick things off by understanding what futures contracts are. Futures contracts are agreements to buy or sell assets at a predetermined price on a specific future date. The beauty of futures lies in their standardization, which means they follow the same terms and conditions across the board, leading to increased liquidity and lower default risks. So, how do futures work? Futures allow traders to speculate on the future prices of underlying assets. You can either go long, betting on price increases, or go short, anticipating price declines. This reflects the collective sentiment towards an industry, making it a valuable tool for portfolio managers to manage their exposure to various assets. Now, let's explore the benefits of futures trading. Risk management. Futures markets are powerful for managing risk. Traders can transfer their portfolio risks to counterparties, reducing overall risk exposure. Capital efficiency. Futures require significantly less capital compared to owning the actual assets. This opens up opportunities in spot markets and provides insights into market sentiment. Early market insights. Many futures markets open before stock markets, offering early insights into market sentiment and encouraging traders to implement effective strategies. To make the most out of futures trading, traders often employ various strategies. Here are a few popular ones. Trend following. Traders analyze market trends and make predictions. Going long during bullish cycles or shorting during bearish ones can lead to profitable outcomes. Breakout trading. This strategy capitalizes on price fluctuations beyond established ranges, providing opportunities for traders to maximize their gains. Before we wrap up, it's crucial to mention responsible trading. While futures offer exciting possibilities, they are highly leveraged instruments. It's essential to trade mindfully, understand margin requirements, and use leverage responsibly to avoid unfavorable outcomes. In conclusion, futures trading is a dynamic and versatile approach to investing that offers numerous benefits, from risk management to capital efficiency. If you're intrigued by the world of futures, consider exploring different strategies and always trade responsibly. That's it for today's video. If you found this information helpful, please give us a thumbs up and subscribe for more valuable insights. Thanks for watching, and happy trading.